April is the season of summer vacations, mangoes and family trips. And what else? April is also the beginning of a new financial year and you can make it the season of your budgeting and tax planning. Watch this video till the end as I will explain how you can make the most of this month. Namaste. This is Akriti Agarwal from Wealth Café, where we help you make smarter money decisions. We are all known to be procrastinators, right? Like we wait till the end to finish our work deadline or school projects or anything. And we also do the same with our taxes. Where a new financial year starts in April, we wait till the end of the year, that is in March, to make all the tax saving investments, and we are running around everywhere to arrange the money or to figure out where to invest and even try to compute how much to invest. You can look at this chart where it shows that the most inflow in equity linked savings schemes, which is your tax saving mutual funds, happens in the month of February and March. Right? And that is what we have to change. We have to bring these investments monthly and plan for them properly. Now, how we do that? Your appraisals have just come in. It's your revised CTC. So it's the best time to look at your numbers because you already have to make certain submissions to your employer and figure out what is the income in hand that you're going to get. So best time right now is to start looking at your numbers properly, not just from the appraisal point of view, but also from the taxes point of view. So let's go step by step as to what are the things you should do. Step 1, review your revised CTC and figure out the taxability of various components. So say if your CTC is 10 lakh rupees and after considering HRA, LTA and other allowances, you figure out that your taxable amount is 6,85,000. Step 2 is to figure out of the 6,85,000, how much do you have to invest for tax purposes? Confused? You might say, what is there to invest? Let me just invest everywhere. 1.5 lakh in ATC, 50,000 in ATD for health insurance, 50,000 in NPS, and some other donations. And if you have a home loan, then might as well put money for that as well. Well, do you even need these deductions? That is why step 2 becomes important. Rather than going ahead and investing your money in all the options that are available for tax saving purposes, you must look at it in a reverse manner. Check your salary amount and figure out how much you need to invest. So where in our case, where your CTC after all the salary deductions comes to 6,85,000 rupees, you must know that any amount less than 5 lakh rupees is tax free. So basically you just have to invest 1,85,000 rupees and not all the other options that we just discussed above. So your step 3 is to figure out where should you invest this 1,85,000 rupees. Every salaried individual gets a standard deduction of 50,000 rupees and you don't have to invest, spend or do anything about it. Just by being a salaried person, you get this deduction. So out of 1,85,000 rupees, 50,000 deduction is already taken care of and now you have to worry about 1,35,000 rupees. Now wait, just don't go ahead and put everything in PPF or FDs. Of this amount, figure out how much is going in your employee provident fund. Let's say for the entire year, 35,000 rupees would go towards your employee provident fund. And if you would know, it gets deducted from your salary month on month. So now you're left with 1 lakh rupees. Now out of this 1 lakh rupees, you can check how much of your health insurance and term insurance you're paying. So even that premium is taken care of. Now once all these deductions are removed, you figure out that, oh, I just have to put aside another 80,000 rupees. So basically you have to put aside 6,600 rupees approximately for the purpose of your tax saving. Isn't it great? Like instead of running around at the end of the year to save and invest in random assets for the purpose of tax savings, if you start today, you just have to put aside 6,700 rupees each month. And of course, you can figure out based on your entire investment planning and risk profile as to where you should put this money. You can watch our earlier video on how to plan your tax saving investments to understand where to invest this money. Now, this was an example to tell you how to plan your taxes in April. That is, make this month your tax planning month. Now, of course, if your income is high, you would have to plan your taxes in a better manner and you will have to invest a higher amount. But of course, that is why it is called personal finance, right? Each one will have to look at their individual numbers. But it's a good time to look at your numbers and start planning today. And don't forget that when you look at your taxes, it's only a part of your investment planning and not the other way round. So I hope that while you're sipping on that mango juice, you're also doing your tax calculations and investment planning this month. And until then, don't forget to like, share and subscribe to our YouTube channel and wait out for us every Wednesday and Saturday where we bring freshly brewed content only for you.